Anurag, Asham, Mark, Mike, good morning, everybody.
Morning, guys.
Yeah, we turned Dave's voice on now so we can hear him.
Oh, the privileges of leadership, huh? I get to be heard.
Mike's got all caps. Is it a really good morning, Mike? Or are you really angry about something?
Yeah.
You might have been short for the first 5 minutes and had a lot of fun with that. Check this out once, Dave. I hadn't seen this before because I normally don't watch these charts on the 1 minutes.
Yeah.
Like how on the intra-trader script has a little bend in it when it draws it in when you're watching it on the 1 minute script.
It has a bend in it?
Yeah, check it out. Like right before.
Oh, yeah.
Same thing on both sides, and I think it did it on the 15 minute as well. If you can kind of see it underneath there.
Oh, yeah. Yeah. That's cool. Yeah.
Look at here's the half hour slightly down. It's a little nuance I've never seen before since I don't watch these on ones.
Interesting. Very interesting.
Mike broke even this morning. Well, it's better than a negative, right, Mike?
Yeah, you didn't wait until the move, then I guess. I mean, yeah, it was tricky. I mean, it's up and down. And it always happens that way when we're down at a trough in the spreadsheet.
With that zero, yep. Asham nailed it in the chat. He said, yeah, we're at that zero, and Dan doesn't like those zeros. Nobody likes the zeros.
No.
See, I went from a positive one to a negative zero. Not good formation here. And staying negative on the ROC. And looking at the 4 hour, little up expectation there. So then the 1 minute was pretty close actually, but it actually was slightly down. So we're expecting to pop up.
934 it moved up.
Yeah, it definitely popped up there.
And then we had the down move.
And there was that, yep. I had one client was basically pretty even. I think it might be same there where you had the short, but the fill times might have got him on this minute here, depending on when he was in.
Order filled.
Oh, somebody's filling orders.
Yeah, I'm short the ES. I just added to the position. Yeah, just FYI, guys, I'm short just about everything here. Don't follow me, not financial advice, but I see a downturn coming here, especially in the major indexes anyway. I'll see what happens today. It's got to happen today, though. If it doesn't happen today, it's not going to happen.
Take these off for 1 minute. That's a little bit of noise. I watch it every now and then. Yeah, definitely a lot of activity in the SD this morning on the NQ, and we know what that usually equates to. When I was watching the 1 minute, it was like the heart chart again, cardiac arrest going on.
Yeah. Yeah, it doesn't look terribly weak right now. But I think it may creep up on us, so we'll see. My 4 hour, I don't like the NQ, so I haven't shorted the NQ. But the S&P 500, definitely, I think. We'll see.
Let me get my chat back, make sure I'm not missing stuff. There we go. Oh, Sean's got a bunch in there. Yeah, there you go, Sean. I just caught up with all your notes. Thank you. Maybe you were leading to my brain osmosis and thinking about automatic updates.
So how was your camping trip last weekend?
It wasn't actually the best. We were a little packed in like sardines, which you get at some of the public campgrounds. But we figured we had friends that seasonal at this one, so they're there all the time. They've been there for 7 years. So we got in, we parked. We're like, yeah, we don't like it so much here. We like having a little bit more elbow room. You know, you're not staring at your neighbors.
Yeah.
And then Jess wasn't feeling the best, so she toughed it out though and said, because it was funny, we were supposed to go down to the same campground the same weekend last year, and she didn't feel well, so we canceled. Then this year she's like, I don't care. I'm not feeling good. We're not canceling 2 years in a row. And it turned out it was the exact same weekend, actually, back-to-back years. But we had no idea.
Oh, okay. Yeah, I've been in those campgrounds. Like I told you, I've been camping since I was a kid, but I remember the ones, especially the ones in the wide open fields, and they're like just right next to each other.
Yeah, no trees anywhere. Those
no trees, nothing, no privacy, no shade. Yeah, those are weird. The best one I ever had, the best camping experience I ever had was up in the Adirondacks, just past Old Forge. I think it's called Ninth Lake. There's like 10 or 11 lakes, and each one has a different number. So it's first, second, third, fourth, fifth. And this was up in Ninth Lake. And beautiful. I mean, pine trees all over the place. We parked in between these two pine trees, and we were kind of close to the neighbor, but the pine trees gave you a little separation, you know? And just a beautiful lake. And out in the middle of the lake was this little island. And, you know, I was like 14, 15 years old, and me and friends would just love to canoe out to that island and explore. I mean, it was fun. It was super fun.
Nice. Yeah, whenever you get the real trees and separation, it's so much nicer.
Yeah.
So we got a different one planned for this weekend. We're going to Wisconsin. Then we'll take a break for a couple weeks.
Yeah. Yeah, too much of a good thing, huh?
Right?
All right, we're starting to drop a little bit here. Let's see what we got. What's the spread doing? The spread is moving a little bit higher. It seems like because we're at this trough area, I mean, yeah, we had a negative bias today, so we did get the move lower right around the 9:40 level, 9:40 a.m. Eastern time to 10. And then now we're starting to trend upward again. We seem to have tried to get into positive territory on a swing basis, but it just never got there. It just didn't. I mean, it was not well formed. It didn't look really good. Looked horrible. So.
Yeah, looking at the daily chart here, it's just can't get to even to a 1.
Right.
It's trying right now. We'll see what it finishes with, 0.76. Yeah, it's trying to push up right there, and it obviously failed right here because it came back down.
Right. And it's really kind of odd because the Dow has really been very, very strong. So we had a couple of days moved up, but there's no follow through at all.
NQ's breaking below the 50. Then we got some EOP curve is turning green on the NQ now, or NDX.
Yeah, the NDX, this one, I'm not shorting the NDX, I said. I just don't like the way it looks right now. I got the ES and the YM and the RTY.
No, there's definitely a downturn on the New York side.
Yeah, and actually the NQ is down more than all of them, but I don't know. We shall see. Sham says, sent you guys an email last week for the ValArb 2.0 scripts and dynamic ATR updates on a different time frame as well, if you can recall. Let's see that. But do you have the ValArb 2.0 scripts up yet?
That might have been, I think he was thinking Renko Cloud and dynamic updates that you were just talking about, and it sounds like we already have. In your hot little hands, more of these guys where we're dynamically updating. But I do have one with that on there. Let me find that screen. It's one of my many. I try not to move. Here, let me do this. I know how to use tools. There. There it is. And magic. Yeah, the 2.0s and so what am I on here? I'm on a 4-hour. I was looking at this on the 4-hour too.
Yeah, it briefly went positive and then it stayed negative. So.
And then she's kind of pointing like this down move isn't gonna last or not. We'll see.
Yeah, it's pointing, but it's a negative thread, so let's see. Like it was pointing, like just like in the spreadsheet, it was kind of pointing up for a while, but it looks like it's kind of failed.
Really low ARB volume too.
Yeah, not much there. Yeah, I think we're going lower. I think we're going to end up going into another negative swing trade. I'm going to put on a short MYM, short MES, or long MNQ. Yeah.
And let's see. This is at 155. I think I adjusted this morning. Sham says, Dave, you mentioned last week you were going to explain the swing trade.
Yeah, it's not quite ready yet. But I mean, I guess I can go into a little bit of it. Let me see. Let me get my.
There goes the break on the cues for you that you're not waiting for, but it'll probably help everybody else follow suit. Interesting.
Oh, by the way, Asham, I don't know if you followed through with Tradeovite or not for dormant trading. They will do a wire transfer. I never got the check. I had requested that check from the account, and I never got it. And so I contacted them. I said, "Look, I never got the check. It's like been 10 days, you know." And so they put a stop payment. They put the funds back in my account, and they said, "Well." The other option is to do a wire transfer. Now you have to pay for the wire transfer though. So, it wouldn't make sense unless you were doing, there's the break. Yeah, ES is starting to drop.
Yeah, they're all dropping, I see.
Everybody's going down. Yeah, we're only down 11 on the YM, so I'm going to sell another YM.
Order filled.
I usually do this on my laptop, but it's updating the iOS.
It's always something, right?
Yeah.
RTYs are low and positive, guys, so.
I can. If you want to switch over screens here, I can go over the swing trade, the new swing trade scripts. It's still in development. I'm testing them out. As soon as I turn, yeah. If you want to, we'll switch over here.
I stopped so you can share whichever one you need to.
Okay, I forgot how to do that. Here we go. Share.
Shankar's on. Welcome, Shankar.
You guys see that? Okay.
I got it coming across.
Okay. So, sorry. So what we're looking at here, the way I've been doing it is I've got it on the S&P 500. The one script that I really like is the new MT Swing. Now we're in version 2 of the MT Swing script right now. And the way I had it on the ES will not show that swing trade for whatever reason. I'm not sure why. But it will show the swing volume. And so what I've been doing is using the scripts on a 4-hour time frame and a 10-minute time frame. The 10-minute time frame, because just like the intertrader scripts, we have these we have the lines here that are drawn on the 50% mark. Well, I was mostly involved in this part because we rewrote that script. Instead of doing a 50%, we actually did it based on a new algorithm that creates support and resistance areas. So rather than doing a 50%, we're saying let's do something about support and resistance. You can see yesterday it worked perfectly. The orange line doesn't come into like 9:45 Eastern time. The dotted line comes in at 9:35, I think. So one of these, this one is drawn first, and then this one comes in later. But what it does is it sets support and resistance for the entire day. And it was absolutely beautiful. I mean, we hit hit support here a couple of times. It bounced back up to resistance. Resistance here with a down arrow hit perfectly. I mean, it was absolutely incredible. And then we hit, and then also the Renko Cloud, the new Renko Cloud study, perfectly encapsulated price. And whenever it started moving away from price, it came away from the cloud, it came back into the cloud again. It's working really, really, really nicely. The second thing is that the swing signal, instead of a single line, we're using a 3-line system now. And so we've got a fast line, which is the thin line here, and we've got 2 thicker lines, which are moving averages of the thin line. And so when they cross, typically we want to look at a long position. And so we had a stabilization of the real-time line for the swing signal. And when it crossed, it was a perfect opportunity to go long here. And that kind of stabilized for a while, and it really, really did a nice job of it didn't go down, it didn't go up. Now it didn't go up. And when it didn't go up, we were looking for another short position right against that upper resistance area. So the orange line and the dotted line are now support resistance. So the script is the MT swing support resistance. How we actually calculated that is really, really complicated. I'm not going to get into it, but it's really crazy, the algorithm. And so now, when they flip, so for example, this was bullish yesterday because the solid line was below the dotted line. When they flip like today, we have the solid line and we have the dotted line. When the dotted line is below the solid line, that's a negative indication. When it's above, it's a positive indication. So bullish and bearish. The swing signal is starting to turn up a little bit. The fast one's starting to turn up again. So that's why we're getting a little bit of a bounce here. And then what we're looking at here on the swing volume, this is the synthetic volume. But what we did was, instead of having the negative volume on the positive side of the zero line, we took away the absolute value of that, and so we created negative volume. We wanted to see how far it went down on the negative side, and we created positive volume, which is green, and the negative volume is in red. And it's completely synthetic. It's not based on actual volume of the S&P 500. But you can see here that it was kind of weak. It wasn't very, very strong here, and so we ended up going into kind of a bull run. And now we've gotten that bull run, but you can also see that it's starting to decline a little bit. So there's not a lot of volume or support behind this move higher. And it looks like right now the resistance area at the orange line is holding price in. And it's also interesting that it also is almost the same level as the Renko Cloud. We saw that yesterday too. The Renko Cloud lower end was right at the same level that we set our support area. So a lot of interesting stuff here. The 10-minute is where we trade, is where I'm trading right now. And then the 4-hour is basically our longer term kind of view of the markets, using both the same indicators, much slower moving, but it does give us an overall picture of the trades, of where we stand with the indicators. And you can see that they're both pointing down. Both the moving averages are pointing down on the swing trade right now. And the thinner line, which is the real time, is just slightly up, but it's down significantly, and it's below those two lines. So typically when they're when they cross over, like they did here, the fast line crossed over one of the moving averages, we pay attention to that and we take a long position. And then when it crosses back down again, we either take a defensive position or we get out. There's a +10 and -10 kind of limit on any time frame. So we get it on the 10-minute. This is like the upper limit right here. That's very, very bullish. When it starts to turn down, it's bearish. I took this short trade yesterday. Perfect, hit the upper resistance area. We had a downturn on all of the indicators on the swing signal, and took a short position until it stabilized. It stabilized right in here. Then we had a crossover and we went long. I went long. You could also tell that the volume was starting to decline. We didn't have a lot of negative volume in here. And just for reference, really, really strong volume on that is in the +2, which is very, very positive, and in -2. So there's kind of limits to the swing volume as well on the negative side and on the positive side. So it's really, I'm finding it pretty interesting. As soon as I take my account from $1,000 to 10,000, we'll probably release it. and it's getting there. I would probably say another couple of weeks, and after I've completely tested the entire system, it's going to be ready for release. But it's absolutely one of the things that we wanted to do was kind of rewrite and take all of the ideas and all of the concepts that we had about how the market works now using internal market data. The swing signal down here, this oscillator, uses the internal market data. The rest of these use time and price and internal market data. And this one just uses price alone to create the synthetic volume. So we have kind of, so it's almost like we're, testing one against the other. We want to make sure that, hey, if we're just using internal market data for this, what is price telling us? What is the synthetic volume telling us? Is it going to be a real move or is it going to be a fake move? So we want to be able to use that as a confirmation of what we're seeing in the other signals. The other reason why we kind of started to develop this was that we realized that a lot of the scripts, no matter where you get them from, and a lot of the indicators make you really think about judgment. You have to make a lot of decisions when you're looking at all the indicators. Well, is this positive? Is this bullish for the market? Is this bearish for the market? Is it going up or down? With these indicators, hey, if this is going down, we're going down. The market's going down. There's no guessing. It's going down. Yep, we're going down. We have negative volume. Yes, we have negative volume. A little positive volume. Hits resistance. No volume to follow up with that. It's going into a negative. We're going into negative volume. It's going down. There's no guesswork. I mean, when this goes down, you got negative volume. The market's going down. There's absolutely nothing. There's no judgment. Well, is this good for the market? Is this bullish? Is this bearish? Then you have the trend signals. So you've got the signals here indicating, hey, yeah, this is going to be a down move here. We're in a negative mode. We had negative modes here. Now we're starting to get a positive mode. So we'll see if that, we're getting a little bit of an upturn here. So maybe my short positions aren't going to work out so well. We'll see. But the volume is very low. So this is the check against the other indicators. If the volume's really low, we're not going to get any sharp moves higher. We're also still negative on the longer term. We're still down. So we want to be able to use all of these indicators to be able to give us an idea of whether or not we should be long or short the market without a bias, without
subjectivity,
without too much subjectivity. Exactly. There's absolutely no doubt when these, especially with the swing signal oscillator, when these are going down, the market's going down. There's no if, and, or buts about it. When it started turning higher here, when we had the crossover right there, there's no if, ands, or buts about it. The market's going higher. None. Zero. And then as soon as we started to see the positive volume, that's an uptrend. So there is no guesswork to it. When you see this going down, market's going down. When you see this going up, market's going up. Absolutely 100%. No guesswork. So anyway, that's what we're working on. I'm still testing it out to make sure that we can actually make money with this. And so that's my job. I'm trading it with real live funds. And I had a positive day yesterday. I've had a positive day 4 or 5 days last week. Actually, it was positive almost every single day except one, which
Sean wants you to test in his Tradevate account. Be careful what you wish for, Sean.
What did he say?
He said you should test it in his account.
Yeah. But yeah, so we'll see. I think it's very exciting. I think that it's going to take a lot of the decision making out of trading. One of the things that we've been talking about is trying to automate the entire process. So we have automated entry and exit points that maybe TOS or we could try to script this in some way for different platforms. So we had automatic trading. That's a little bit more difficult to do because of all the moving parts. There's a lot of moving parts in these scripts, and so that's going to be very, very tough to do. But we want to try to take the subjective decision making process out and alert what's going on. So we've got a negative bias on the support resistance. We've got the cloud showing us that basically we're in a sideways pattern here. We've got the signals indicating that the trend is lower, at least for now. And then we've just got a positive trend signal, which matches the swing signal. We're just kind of turning up a little bit here on the swing signal. But the volume was pretty poor right here. So now we're starting to get a little bit of a negative volume in there. We'll see what happens. But typically we get very much like it's not the same script, but the oscillator is very much the same on the ARB volume oscillators. So when we hit a peak here, that's probably the peak of the move. And when we get the next bar lower, that gives us an indication that we're probably going to retrace down a little bit. And so I'm finding I've been positive every single day on it. So except for that one, which it was my own fault because I was just lazy, but I was basically lazy. And I had my own, well, let me tell you the reason why. And it was I think I lost maybe $20. And the reason I lost $20 was because I had a bias going into the day. And this is kind of maybe a psychological thing, but I had a bias. I thought the market was going to be short. I was ready to short the market. The signals were telling me, hey, you should go long. This was last Friday. But my bias was going into the market, hey, this market's going to decline. But I ignored the signals and I took a short position and it went against me and I got out. And then I said, wait a minute, I have to look at this objectively. I can't look at it subjectively. What are the signals telling me? Are they up or down? They're up. Okay, well, that's my fault because I came in the market with a bias. So hopefully these kind of signals can give you a more objective view of the market, of what's really happening. Like I said, when this goes down, the market's going to go down. There's no doubt about it. When they're going up, it's going to go up. And then you use the volume just to be able to tell you how strong the move is, if it's strong or it's weak.
It's amazing how psychologically, when you get in a mode, that you can become blind to your indicators that are telling you blatantly to do the other thing until you're out of it, and you're like, oh yeah, how did I not see that before?
Exactly. Yeah. When I review some of my trades, it's like exactly that. How did I miss that? How did I not see that? And so when you look at this, then you're gonna say, hey, this is down. I should not be taking any long positions here.
Which leads kind of to a question Keith had there was, so if you're looking at, you had your bias, that was probably from the overall market timer spreadsheet. How are you working in your analysis with the possible new swing trade scripts and like the daily, weekly analysis from market timer?
So I'm looking at these. What I'm doing is I'm looking at each day as a brand new day. So if I'm trading my money, it's like, okay, I know that there's probably going to be, right now, even the spreadsheet has a slight positive bias because there's been no negative herding. And the warning is that, hey, we're not going to go into a decline until we see some negative herding, bearish herding. We haven't seen that yet. So because we haven't seen that yet, then I'm going to say, okay, we have a slight positive bias here, but I want to also read the signal. So when we dipped here, when we see the resistance area coming up here, that's why I went into a short position, and then exited that position when we got down here. But I'm going to be short. I'm probably going to be looking, because this is still negative, but it's trending positive. And so you have to say, okay, well, if we're trending positive, even though there's a chance that we're going to go negative, you have to look at these signals and say, okay, what is it telling me now? It's telling me in the short term, we're probably going higher, but the volume is extremely low here. So to be careful not to take a long position. So if you're careful about not taking a long position, there's only two things to do. You either have to stay out of the market or you go short the market. And you can see there's a regular oscillation of the negative and positive volume, except for here. That was a very long positive. But even as you got closer towards the end of this thing, you can see that the volume was very, very weak. And especially with this really big high with pop-up yesterday, that was a great signal to go short. The volume here, even at its peak, was like way down here. It was almost zero. So that was a pretty easy short. So at this point, we've got this moving up. We've got no volume. We're right up against our resistance area. So either I stay out of the market or I'm shorting. Those are the only two choices.
And this might help some people. I always have my little brain tricks, whereas the lines that you're drawing in there, which we'll touch on Mike saying, yeah, it's not there, or Andre's seen it, it's not drawn on the 4-hour. That's because of how it draws. But it's just looking at, I think about that as like the floor almost. So the solid line is kind of like the floor, and the other one's your, support, and the other one's resistance. Now you're upside down, right? It's like the floor is above you.
Right.
So you're standing upside down. That's why you're looking at shorts.
Yep, exactly. Yep, we're upside down here on the market, so we should be looking at some short positions here. The only reason we got a little bit of a trend up signal here is because of this upward move here. But look at there's no volume behind it. Nothing.
Yeah, it shouldn't last.
Nothing. So I'm anticipating it's not going to last. The 4-hour is also declining just slightly, and we are above the cloud here. Typically, when we're above the cloud, it comes back into the cloud. We're above the cloud, it comes back into the cloud. We're above the cloud, and we've been above the cloud now for a good number of days, since last week, really. And so on the 4-hour, I'm anticipating we're going to come at least back into the cloud here before we eventually move higher or we have a new trend change. So the cloud also kind of helps because, when it does move too far away, remember the cloud, the Renko cloud, the reason why that kind of works is that it's an average price. It's kind of like what the typical price should be, the range the typical price should be in. And so when we move too far away from it, typically comes back into that area, or at least touches it. It moves up far away from it, and then it comes back and touches it. Moves away from it, comes back and touches it.
moves away from it, comes back and touches it. Up here, moves back and touches it. And really, we're just kind of in a sideways pattern at this moment. So all of these together should kind of give you a pretty good idea of, which way the market is headed on a short-term basis. And then, you kind of verify that, hey, if I am going to take a position here, if the market is moving higher, but we still have a decline in volume on the longer term, on the 4-hour chart, and we're way above that cloud on the 4-hour, the probabilities are pretty high that we're going to come back into that cloud, at least with the declining signals. So you have to play the probabilities.
Keith wants to know if you're using a stop on your trades.
No, I don't use stops. I don't want to get knocked out. There's too much manipulation in the market. And so, the larger players, they sniff out stops. They know where people put their stops.
That's the trouble of those that haven't watched that specialist video. We were talking about it last week when I was on the road. But yeah, what your brokers are doing is selling. I shouldn't say selling, but it goes to the upline market makers and they see all the orders. So they know everything. Yeah,
they know the depth of the book, and they can pretty much tell exactly. And almost everybody, even on even if they didn't have the book to look at, it's pretty obvious where people put their stops. They put their stops. Where's that ES chart? They put their stops at old numbers or the most recent high. So
yeah, it's very psychological, those round numbers.
Yeah, so 317.99, everybody's got their stops at 30.18. I guarantee you there's probably hundreds of stops there at 3,018. And I would not be surprised to see that they take it up to 3,018 and before they drop it
again. Yeah, 30.18.01, and then it goes down.
Yep, exactly.
Just enough to fill all the orders.
Yep. So all those whole numbers, round numbers, like here's 30.20, just barely hit it. What was the high there? Is 30.20.
Yep.
When people went short, bounced around, well, all the liquidity is above that 320 level. They took it right back up and then they dropped it just to fill in all those orders. Take all those orders short. So that's the reason why I don't use stops. There's just too much manipulation in the market. And so what I'll do is I'll make a decision. I'll say, look, if I've got the 4-hour going down, I've got the 10-minute. It looks like it's starting to pump up a little bit here, but there's no volume, very little volume here. So I'll kind of hang in, or I'll exit the position when I go above the support resistance area. Previous days, support and resistance also seems to work. So like you can tell here that we came right up to it. We came right up to the previous day's resistance level.
Yeah, Sham's kind of asking that exact thing. Are you using those lines? You're waiting to enter trades until after those lines form, so you're not taking position at the bell.
Yes, absolutely. Yeah, the first line is the dotted line that will form immediately, almost immediately, within 5 minutes, and then 9:45 this one forms. I don't like the first 15 minutes anyway because of all the market on open orders. So there's lots of volatility right around the open. So,
and the difference meaning there for everybody that's thinking, how come you're always doing the vol arb at the open then? It's when you're out long or short, only one instrument. That's a different story than being the hedge on the vol arb trade. That's why we can do the vol arb trade at the open or before the open or shortly after, because we are hedged. If there is a massive movement, we won't get killed. What Dave's talking about here is being long or short one instrument and not entering those trades until at least 9:45 Eastern.
Yes, exactly. Yeah. So in most cases, I'm using the new micros for the volatility arbitrage, and I'm using the YMES for the single trades most of the time. Not all the time.
I've been using the MES last week, basically scaling in and scaling out of positions, which was very, very nice. I kind of like that.
Mm-hmm.
So remember that MES is 1/10 of an ES contract. So you can do, 1 or 2 or 3 or 4 or 5 MESs and you're still not up to a full ES contract.
Which is a good one for people to definitely use the micros on, because the regular ES is $12.50 a tick versus a $5 tick like the Dow is or the YM.
Exactly. And then you can scale in and you can scale out of those positions. So right now we've got the swing signals kind of like, stabilized here, hasn't really gone higher. It's still negative. So the other thing too is you want to look at both the moving average lines are green when they're above zero. They turn red when they go below zero. And when it's still negative, you still have some negative bias there, but it is moving higher, and it crossed this morning. So we may see. I don't know. So they're taking out stops right now, basically. They definitely are. They hit 318. Let's see if they come back down after hitting 319.
I was just watching that on another screen where it just crossed the 3018, the exact same one you're looking at now.
Yep. So we'll see what happens, because we're kind of far away from the cloud too. So that's probably a good spot for them to hit those stops. So, whoops. No, that's okay. I'm done, I guess. But that's basically how it works. And as long as I'm making money with the script and it's on a consistent, reliable basis, then we'll release it probably sometime next week.
And for clarity, that script is a market timer script.
Yeah, those are all market timer scripts. Yeah, I'm watching the SPX because the oscillator, it only works on the SPX, the cash index. And then I trade the ES, correct.
Then we'll probably get questions. Will that also correlate over to if people wanted to trade the YM on it? Or should they just stick with the MES or the ES?
Well, no, so these scripts will work on both the SPX and the Dow cash index. So instead of using the SPX, you could use the DJI for the cash index, and you can use that. And trade the YM.
Okay, because people will ask after the fact.
Yep. So you think it's going to be a couple weeks till ready? I don't know. I want to make sure that it's dead simple to use. We had the first iteration of the script last week. Over the weekend, we worked on version 2, which I'm using right now. I don't know if there's going to be, we're kind of working on a few different things right now just to make sure that it's dead simple to use. We may make a couple of changes, maybe. We don't really have anything in the works right now because it seems to work really well. So, if we do any more development on it, then we'll wait until that is tested as well. But this version 2 seems to work really, really well. I have a couple of ideas to improve it. So if we do a version 3, then it's going to be another week after that before it's released. So a couple weeks. Yeah, a couple weeks.
For those that were watching the ES, now we've dropped down to 3017. There it goes.
Yeah, hit that 218, and we're
They got everybody in on that one. They took out all the stops. We'll see how the day progresses. But if you follow these, once you get these scripts and you follow them, what the idea is to make it just brain dead simple. It's almost as automated as possible. We've talked about automating trading before, and one of the big drawbacks of automated trading, I'm talking completely automated trading, so that you write a script, executes the trades for you automatically. You don't even have to look at it. The problem with that is that there's a lot of information in the market that it can't account for. It doesn't have that judgment factor. You can't look at it and say, hey, you can't create a script to say all of three of these indicators are all working together. I mean, there are people who are extremely smart doing this stuff. I mean, don't get me wrong. And they are looking at every potential angle of the market possible to be able to trade it correctly using automated systems. But it still can't beat, I think, a human brain. Now, Facebook, though, has just come out with a bot that can actually beat traders at poker. I don't know if you saw that. Some of the best poker players in the world have tried to go up against it, and it actually, and here's the interesting thing, they had 4 top poker players play the bot that Facebook created, and the bot beat all of them. Now, one-on-one, you could say, okay, well, the bot's better than that one player. But when you had 4 players against the bot, and the bot turned out to win, how does it do that? How does it read the other players? Are they, they're bluffing, or their bet size, or, I don't play poker, so I don't really know what happens in a poker game. But to me, it's pretty interesting that they would create a bot that could beat 4 players at the same time.
I am a poker player, and I find that fantastically interesting that they can take out the human element in reading people, and it's strictly mathematics that they actually beat these guys, and they were able to pick up on whatever tell based on their bet size or whatever it is. So that's extremely interesting to me.
Yeah. Well, do a search for it.
We'll have no spoilers in here because I am watching the recordings of the World Series of Poker because it started last week, and their probably final table might have been yesterday or something. So if any of you guys are watching and know, I'll take away your membership if you tell me.
Yeah. See, look at these guys. There goes the ES right there. Look at that. The volume was so low. It's just a good indication it wasn't going to last. And they took out those stops at 3,018. Yep, took them right out, and then dropped it immediately.
All 4.
Yeah. So see, we use that volume. Use that volume, synthetic volume, as a good check to say, hey, here, let me. I'll switch it back over here so I can show you what happened with that volume. Oops, not that one.
I just stopped mine, so it's open for you again.
Yep, there we go.
Gotcha.
So let's see, on the ES, they came right up to 318.75, took everybody out that had those stops at 318.25. This was the previous high that we pointed out at 318.25. They took it to 318.75, 50 cents above that. Took everybody's stops out. It was just above that high. They probably put it in at 318.75, and then they took it right back down. And so when we looked at the volume on the cash index, remember I pointed out that the volume was very, very low here. No volume behind that move. And when there's no volume behind that move, they can take it right back down again. So there's all kinds of manipulation. And so part of the other kind of thing that we're, looking at with these scripts is not only to make it dead simple, that when this goes down, hey, the market goes down. When this goes up, the market's going up. But then we use the volume as a check to see if the move is real or not. Try to eliminate some of the manipulation that we see. All yours.
Yeah, so I'd say wrapping up on what you were talking about before, this is taking what very deep pockets and extremely brilliant people do to try and write these algorithms to literally trade for them. This is us and the Market Timer team and Dave doing all of this testing and everybody bringing that type of thing as close to the retail trader as possible without having to spend hundreds of thousands of dollars for computer algorithms. I say is the way I kind of look at this.
Yeah, that's a good analogy. And we're trying to put the work in ahead of time so that we don't have to think about it later. And also that anybody could pick up these scripts, take a look at it. Hey, if it's going up, it's going up. It's going down, it's going down. And you make it brain dead simple as possible. Almost automated, but not quite automated. Isham says bot manipulation in poker.
Yeah.
Yeah. I wonder if they could take their bot on the road and go to Vegas, I'm pretty sure they'd get banned. Very, very.
Right. There's been other books for that one. That's a fun one too.
Andre says will be available to download from Market Timer. As far as I know, this is a bundle product. So in other words, these aren't individual scripts like the premium scripts. This is a bundle. It's a system really for trading the S&P 500 and the Dow. And so they're going to treat it the same way they did the InterTrader bundle. So it's going to, I don't know how they're going to do it yet for existing customers and subscribers and premium buyers and stuff like that. But these are not individual scripts. These are going to be bundled together as a system. And because you can't really use one without the other, they all work together in order to make your to make the system work. So I don't know. I'm sure they'll send out an email about it later and let you know what's going on.
Which is bringing us close to the top of the hour. So if you guys got any last minute questions, let us know, or we'll be wrapping up in a couple minutes here. Appreciate everybody jumping on. Good turnout. I like it.
Let's see. Asham says, Dave, the intraday script and the new swing scripts are different for different situations, like trading with a trend intraday and the swing trading, which is waiting for the swing lows and swing highs to take position. That's correct. Yeah. So the intraders bundle that was released a couple of weeks ago is basically identifying those, and that included the SD and ST signals, which is in the premium scripts, but it had a variation of the intratrader script for identifying those opportunities when there's large institutional trades. The swing trading bundle that we just discussed today are almost completely rewritten. The support resistance areas, the swing oscillator, the swing, the volume, synthetic volume has all been rewritten in order to use it just for swing trades. That's absolutely correct. And Nurk says he has a question on the H4 slope for Friday the 12th. Yeah, he did have that question. Let's go to the H4 and take a look at Friday.
Yep, so I'm looking at it right here where we had the red, green bars prior to it. So let me pull up on the side here. Friday, okay, I got that. H4 on Friday was upslope, down bias.
Yeah, so I took the last two bars, and if you take the bottom of the red bar, which is the two bars previous, and so you take that line and connect them to the top close of the next bar.
So yeah, so I put a line on there.
Is that the 9 o'clock, the next bar? Make sure you get the right one.
Yeah, so it's from here to there, right?
Yeah. That's the 9 o'clock bar, right?
Yes.
No. Yeah. So that's the upslope. Yeah.
So upslope, down bias.
Yeah.
Take it into those two. Because basically, it starts here and there.
Yep. You take the close to close. So, I mean, there's a couple different ways you could have looked at that. You could also taken the bar previous to that, which is the close high. You could have taken the top of that and connected to the top of the 9 o'clock bar. That would have been a down bias. But I chose to do the low of the middle bar there, which is the overnight session, the Asian session, to close at the top of the 9 o'clock bar. Is that the 9 o'clock bar though? It's not, is it? You got it. That's the 4 a.m. bar for you. That's the 9 o'clock bar right there, isn't it? Yeah.
Oh, for when this one starts, you mean?
Yeah, when the 9 o'clock bar ends. So, or not ends. Is that?
We don't know where that ends because we're making the call before this one's even.
Yep. No, yeah, that's right. So it's the bar before that.
Yep.
So, I mean, you could have gone either way with that, I suppose. Strong up move. There is, some judgment had to be made in order to determine whether or not that was going to be a down bias or an up bias. I chose to use the bar prior to that. I could have gone back 2 bars or even 3 bars. If I went back 3 bars, it still would have been an uptrend. If I went back that 2 bars, it would have been a downtrend, slightly downtrend.
And that one was actually with this activity overnight, and it was a Friday, and this is actually the 1 minute coming in, so we had a 1 minute upslope.
Right.
Or was it down? So the actual call for that day was
down at the open and
trade none.
Yeah, trade none because of that. I think there was a number of conflicts in there for that day, especially with the spreadsheet. But I don't know. Anurg had some pretty good. Let's see. He says we do draw this slope from the 17 hours to the 5 a.m. or 21 hours to the 5 a.m. because in the first case we get an upslope. That's right, down bias. In the second case, we get a downslope up bias. That's absolutely correct. You're absolutely right, Anurg. In fact, I saw Anurg in the chat room talking about the slopes, and I think he had some pretty good ideas on that. I think Anurg, I think we should recruit him to do the TSAs.
Him and Sean, they're getting pretty spot on.
I know they're getting pretty savvy. I'll tell you what. Why don't you guys give me your opinion first, and then we'll go with that. Yeah. Yeah. Exactly. So you guys are spot on, man. You're seeing stuff here, and that's really good. I'm glad you're paying attention to that, and it's really good for everybody. So don't be shy about going into the chat room and telling everybody what you see. Sometimes, obviously, I look at it one way, you might look at it another way, and I might agree with you if you got a different view. The 1 minute is pretty easy to spot. I mean, that works out 90% of the time. The 4 hour is a little bit tougher because either you go back to the previous bar or you go back to the previous 2 bars, or you can even go back to even the 1700 hour, like you said, and kind of get an idea of what the spread is going to be like based on the complete overnight session. But typically what I do is I look at the Asian session, which is that red bar there. So, yeah, that one right there. Because the Asian session is typically wrong. Nook says he loves the chat room. Yeah, it's fun. The 1 minute, the 1 minute you look at what time frame?
8 to 9 Eastern.
Oh, yeah, that's what he's, okay, I got you. I was going to say it's 1 minute. Yeah. 8 a.m. Eastern time to 9 a.m. Eastern time. And if that is like set in stone, that is like, there's no discussion about that one, except there's one exception to that. And if it's completely flat, absolutely completely flat, then we'll go back to the 6 a.m. period, or maybe
take a little bit more. Exactly.
Yeah, take a little bit more in there to see what the slope is. I just wish somehow one could use the Valar scripts 2.0 for confirmation. If you use, the only thing about the Val 2.0 scripts that really, where are we on the spread right now? We're going up, right? So the one thing about that, Yeah. So the one thing about those are that you can take a look at the slope and you can take a look at the lines on the valve 2.0 scripts. And you can use those as somewhat confirmation, but did it go positive? Let's take a look at where we are on that now on the 4.0.
Yeah, let me grab that guy. Yeah, Andre, you're right. If it's the 4 minute, the 4 hour, and the 1 minute, we expect reversals.
Yep. Yeah, if the slope is up, then it's down at the open. Exactly.
It's close on a 4 hour. Let me drop it down to a 15. On a 15 minute, it has gone positive.
Yeah, it did go positive. Yeah.
But we got downtrending potential signals up here, so. And look at the ball arb, or excuse me, the arb volume. Definitely fighting there, negative and positive back to back.
Yeah. What's the bull bear sum there? Is it 3-3 or I can't see?
3-2 right now.
3-2 bull. Okay. I would look at that rather than the arrows. The arrows do give you a good trend. It's just a trend though. It's not a trade signal. So
Right.
I look at the bull bear sum as a better indication, I think. All right.
Appreciate it.
Yep. Thank you guys. Appreciate it. Have a great day, everybody. And we'll see you again on Thursday.
Yep. We'll catch you in a couple days, guys. Have a great week.
Hey, Mike. See you, Keith. Bye. Bye, Dan.
See you, Dave.